Good afternoon, everyone. Evening. Very warm welcome to London Business School. It's a real pleasure to see so many of you here tonight, especially on a Friday evening, I guess. So welcome as well for those joining online. We have some hundreds of people joining online. We are delighted to have amongst us today our students, our alumni, our faculty, our friends, collaborators of the Wheeler Institute and London Business School. Thank you all for being here, being part of the event. My name is Tiago Martinho. I'm the Executive Director of the Wheeler Institute for Business and Development here at London Business School. I'm here tonight with my Academic Director, Elias Papaiano, Professor of Economics, and with the Wheeler Institute team. At the Wheeler Institute, our mission is to improve lives through business and apply business insights to solve some of the pressing issues and challenges that the world is facing, especially in developing countries, emerging markets. A key part of our mission is to bring people together like tonight, leaders from policy, business, academia, and hopefully have a topical, important, and inspiring conversation. So this example is the best example of bringing people together for us. Today we are honored to welcome a team from the Central Bank of Nigeria and its governor, Ms. Olayemi Cardozo. Thank you for visiting the school. Governor Cardozo's distinguished career spans public service and private sector, from his leadership as chairman of Citibank Nigeria to his tenure as Commissioner for Economic Planning and Budget for Lagos State. As governor, he leads a pivotal moment in Nigeria, steering monetary policy and financial reform in one of Africa's largest and most dynamic economies. We are equally privileged to have Professor Helen Ray here this evening, who will moderate the conversation. Helen is the Lord Raj Bagri Professor of Economics here at London Business School and one of the world's foremost experts on international finance and global macroeconomics. Her research has shaped global thinking on monetary policy and capital flows, and we are delighted that she will join in conversation with the governor. So let me just briefly outline the structure of the event. We'll begin with a presentation on Nigeria and the central bank's current priorities, followed by a conversation between Governor Cardozo and Helen. And then we'll open the floor of questions from the audience here and from our online audience too. So the event should last around 1 hour and 15 minutes. We're very grateful to the Central Bank of Nigeria for their collaboration and to all of you for joining this important discussion. Also, for a couple more introductory words, please join me in welcoming Nkiru Balonwu, advisor to the governor on strategic communications and shareholder engagement. Thank you very much.
Wow, it's a full room. Thanks everyone for coming. It reminds me of when I was a student like a million years ago. So thank you and good evening. It's a real pleasure to welcome you all this evening to this special conversation between Professor Helen Ray, OBE, and Mr. Olayemi Cardozo, the Governor of the Central Bank of Nigeria. Thank you, Tiago, for that wonderful introduction. So just last week, the Governor launched the Next Generation in Monetary Policy lecture series at the Lagos Business School. That event, and indeed tonight's discussions, reflect something quite central to his leadership, a belief in transparency and open dialogue, continuous learning, and the power of collaboration between policymakers, academia, and the market. Across the world, central banking is evolving, shaped by global shifts, technological disruptions, and rising expectations of what monetary policy can and should achieve. The governor sees this as an opportunity for fresh thinking, for conversations like this, and for us to be able to collaborate and discuss on the things that are important in the global economy today. Tonight continues that spirit of engagement, a chance to situate Nigeria's reform journey within a wider global context and engage with those shaping the future of the financial system, which is everybody in this room. Many thanks to the CBN team, to Ellen, Tiago, Bushra, Ellie, and the network of people at the Wheeler Institute for making this happen. and to our partners, JP Morgan and Goldman Sachs, for their continued collaboration. And a special shout out to Tony Oki and the Nigeria ambassadors in this room today, which includes Nigerian and non-Nigerians alike. Thank you for your efforts in advancing informed perspectives in Nigeria's story and potential. With that, please let me introduce and welcome my colleague, Mayo Ajibade, for the forward.
I think I got a mic. Gotcha. Good evening, everybody. Well, yeah. Yeah, that's fine. Yeah. My role is quite simple, and I'm meant to sort of set the tone. And in case a lot of you have been buried under a rock somewhere over the last 18, 24 months or so, kind of highlight the journey we've been on and what Nigeria has been up to in the central bank and, in fact, the broader economic space. The country, like you know, has been through the last 2 years a significant amount of reforms, but it's the strong belief is that this were necessary to alter the trajectory of the country, in particular the economy. Bold, strong, decisive reforms were put in place all the way from the top, from the president, and also via the central bank from the monetary side and also the fiscal side, to sort of reshape what Nigeria looks like, and more importantly, to set the foundation of what Nigeria will look like over the next few decades. When you think about it, from an economic and institutional perspective, what we've seen is we've tried to deliver increased transparency and accountability and more of policy coordination. So you hear things about monetary policy, fiscal policy, doing different things at the same time. I think the last 18, 24 months has been, how do we get that working in a coordinated manner? Strengthening security across the country has been priority, particularly in agriculture because of the impact of food and what that means for inflation and livelihood generally. And also in the hydrocarbon areas, because Nigeria, as you know, oil and gas is quite key to the economy, and having security in those spaces was quite critical. There were some strategic initiatives that were put in place by the presidency and also the energy team about putting incentives to drive investments into the oil and gas sector, because that was seen as a quick win of just boosting oil production, gas exploration, and all of that stuff to sort of guarantee revenues for the fiscal. And of course, adjustments to energy tariffs and all of that was also required. I mean, all of these were part of a general move to sort of take subsidy out of the economic landscape, right? Because Nigeria was just used to subsidizing everything over decades, right? So, and that had put a lot of strain on the economy and also the country as a whole. So that subsidy removal process led, of course, to inflationary pressures and all of that through the system. But I think it was a targeted and very, very sequenced way of dealing with something that was quite fundamental to reshaping Nigeria. Oversight as part of the accountability was quite important. So all the government agencies have been put through a system where there's just more awareness and more oversight of what is going on. And this is quite key because if you don't know, then it's very difficult to report, to measure, to actually put policy in place to influence this thing. So that has been quite key in reshaping public finances. Growing non-oil revenue was quite important. And I think reliance on oil, given the global shocks we've seen and the markets also expect to see over the next couple of years, is quite important. So Nigeria needed to wean itself off that dependency on oil. And getting revenues from other sources was quite important. So you've seen a raft of tax laws being enacted to actually begin to generate revenue for the government from the domestic economy. The days of monetary financing, i.e. Ways and Means, those were put to an end, and putting more responsibility on the government to run its house according to what it budgets. And I think optimizing asset and making sure things that we own was generating value to the government, to the people of Nigeria was quite important. So that also was part of the priority of reforms that was put in place. On the monetary side, more to our comfort zone, you see things like, the FX market. Everybody here will probably have experiences about either doing business in Nigeria and being, on even FX practices, trying to send money home that you can't get through because the prices is here or there, using opaque measures. Just returning the FX market to normalcy has been quite a big pillar of this administration. And I think we've successfully unified exchange rates, improved liquidity in the market, and achieved some sort of market-driven framework to allow the economy to actually adjust itself to any shocks or whatever comes through. And that has proven to be one of the biggest things we've landed over the last 2 years. Monetary policy returned to orthodoxy, and that just means doing things the way it should be done, right? So the word orthodox, kind of confuses people every now and again, but it's just, let's do things normally for a while and see where we come out. And that has proven to be quite useful. So we finally gotten inflation significantly under control. That's beginning to trend downward. Tight liquidity environment is resulting in actually the right behaviors that you expect from economic agents. And so that as well is moving in the right direction. Building of external buffers was quite important because you can only react to shocks which you don't expect if you're resilient or you have enough buffers, right? So we spent consciously rebuilding the buffers for the economy in terms of our foreign reserves and all of that sort, to be able to absorb these shocks. And that as well has given us a right outcome. And of course, the recapitalization of the banking sector was quite important because if the country is going to grow after fixing all the bottlenecks, then you needed to make sure the system was resilient and strong enough to support this growth going forward. We know from the data before us that all of these reforms, although they're admittedly very painful, are yielding results, right? We know that the bold reforms, the adjustment to subsidy, the tightening of monetary policy, the reform of NNPC, fiscal discipline being entrenched, are all yielding results, and we're seeing that in the data as they continue to turn out. I wouldn't bore you with the details of those data and all of that because it's probably, I could spend all day talking about them. But that we put in as a phase one, right? And nobody in the government or in Nigeria is sitting back thinking, oh, because we've done this reform, exchange rate is stable, removal of fuel subsidy, we're home and dry. No, we know that these reforms were meant to stabilize the macro. And that's more about the phase two, i.e. that's the phase we're in, probably exiting as we speak, where stable macroeconomic conditions, the environment gives room for prudent policy making and more importantly, prudent decision making by stakeholders. So investors can look at Nigeria today and think, okay, I got a hang of what's going on there. I can invest, I can do business. People can look at Nigeria and say, okay, that environment is attractive enough. It's more predictable. We can do business there, and that's what we need. The real juice is the third phase, which is where we're going into now, or we've entered more or less, is the phase three of all this, right? How do you unlock growth in Nigeria? How do you get development going in the right direction, right? How do you make the broad base of the economy prosper, right? Because all of those metrics are still where they should not be. I spoke about inflation. Inflation at 20% is still too high. We need to get it down to single digits, right? But that can only happen if we get the broad economy growing in the right direction. So we've got initiatives to attract private sector investment into the economy. We've got, how do we create more jobs into this, in Nigeria? And all of this is the focus of the central bank as well as the fiscal authorities. As a whole, Nigeria needs to work better, and we're very, very focused on making sure all the things that need to be done are being done. These slides just tell you the trajectory of inflation. That's, it's gone down to 20% so far. We expect that to trend down lower, driven by the stability in the markets, the softening of food prices based on the efforts on the fiscal side, and a host of other things that we think are now entrenched in the markets. Exchange rate, that's been stable relatively for a while, unified, no more parallel market premiums, liquidity is embedded, there's more flows coming in and out. That's a great outcome. But again, that really is there to support the broader economy, right? And of course, our external reserves are stronger. Reserves are north of 42.5% as we speak, and that we expect to continue on that trajectory as well and grow. I will, that's good. I will stop there, and I'll hand over to the panel or to the fireside chat with the governor to kind of get into the meat of this, and hopefully you guys can get some questions in on what's going on. Thank you very much.
Good evening, everyone. It's a great honor and a great pleasure to welcome Governor Cardoso. Thank you so much for being at the London Business School today. As you can see, we have a very vibrant community of students, alumni, friends here with a great of interest on Africa and also in particular on Nigeria. So we are very, very enthusiastic about this dialogue we're going to have. And indeed, don't worry, you will have time to ask questions after. But I have, Governor, an important first question for you. Mm-hmm. Between Davido Wizkid and Burna Boy.
Oh my goodness! You've
Which
been watching
do you
too many
pick?
videos. Burna Boy.
Ah, it was quiet, but we could hear it. Very good. So now we are going to go to more mundane questions. So, Governor, obviously central banking, so inflation. So we've heard, we've seen that inflation has come down significantly, so great achievements. Probably there's still some way to go to get inflation stabilized or going further down. What is your outlook for the inflation path? And also, how do you see the change, the structural change in the Nigerian economy, the effect of reform on the conduct of monetary policy? So how does that affect the way you think about monetary policy, and how does that affect the path maybe for inflation that you think about?
Thank you very much, Helen. Thank you very much indeed. And let me first start by thanking you, the Institute, and the London Business School for hosting this event. And of course, JP Morgan and Goldman as well for supporting that. That's very good of you. This time last week, you're absolutely right. I was answering the question to who I support, whether it's Davido or now, really, this for us is a very important way to engage, and that's why I'm thanking you for this forum. It's a very important way to engage. Monetary policy, for many, may seem like a complicated subject, but we believe it's less complicated than it actually is. And therefore, the more we can engage, and especially for us at this time, the more we can go out there and tell our story so other people don't tell it for us, the better. So I'm happy to have an audience like this and to be able to have a conversation. So thank you very much for that. Now, in terms of monetary policy, inflation, the trajectory, yes, you're absolutely right. Inflation has moderated and has more or less reacted to our policy toolkit, which central of which is orthodox monetary policy. Okay, and I sometimes I'm challenged when I say that the only monetary policy is orthodox monetary policy, and
so by this you mean interest rate mainly as a tool?
Yep, because truth of the matter is that we came into a situation where they had gone out of orthodoxy, okay, and that in itself created an enormous amount of challenge, extreme liquidity overhang, and funding not going into the right sectors and all that. So we decided the best thing to do is stay the orthodox monetary policy tool, and we did that. And happily, it is the situation has definitely responded, and inflation is gradually beginning to ease. As at the last MPC, we observed that inflation had come down to about 20% from 21 before, and about 37 at the beginning of the year. So it's gone quite a journey. Now, in terms of the outlook, to be honest, I think we have no choice but to simply continue with the tools that we're applying and to ensure that we are able to bring down inflation. Our goal, of course, is single-digit inflation in the medium term. In the medium term.
There's always a question of definition of a medium term.
Yes, and I will leave that to you to define. Leave that to you to define.
That's a prudent response.
Yes, because we don't have too much time. We can spend the next day trying to define that. So, and we believe that going into for example, now I say we are 20. The World Bank recently, and that is their own projection, they recently figured that by 2027 we should be at 15. That's their projection. So I'm just being very open and transparent about that. But to answer your question, we're headed in a direction where we will ensure that inflation is tackled with all the policies at our disposal. At the same time, we recognize that there's trade-offs, and we also recognize that there's need to have growth. Okay, we recognize that. And we are very pleased that we're beginning to see signs of growth. I mean, the last quarter, again, second quarter of the year, growth went up to over 4%, which is the first time we've had that level of growth that exceeds population growth. Okay, so that's a good sign. And these are early times for measuring these indices, given the tightening phase that we have been in. So we're pretty optimistic that going forward, we've done pretty much many of the more difficult reforms, and that the stage is set for an accelerated growth trajectory. The stage is set. Stability has come in place. Inflation is trending down. Growth is looking good, going up. Trade surplus, positive. So we're very, very positive about the future.
Very good. So if we just come back 1 second to the question of reforms. So we know there has been some fiscal reforms, and so some of that is out of the way. There's also the foreign exchange market liquidity, so which is also very important.
Yes.
And I maybe you want to add a little bit on that,
Yes.
because I think it's a key element.
It is.
And then, of course, one could also think financial reform.
Yes.
And so I don't know if you want to tell us a little bit more about this type of reforms also,
Yes.
that may be underway, and how or if they interact with monetary policy, or if they are kind of independent in a way.
Yes. FX, thank you for bringing that up, is key. And why is it key? Because in Nigeria, the transmission to monetary policy is so swift. Unfortunately, obviously, we have a situation where we are more or less dependent on foreign exchange. Okay, a lot of dependency on foreign exchange. Now, what has happened in the past couple of years, which is very, very important for anybody that is looking at Nigeria to understand, is that there has been a fundamental shift in the whole way foreign exchange is looked at and is managed. When we came in, we had a situation where, which is well known, quite frankly, where foreign exchange was a major challenge. People couldn't get hold of foreign exchange. There was a huge backlog of unpaid debts of about $7 billion. And daily requests could not be met. So it was a real crisis. And of course, the value of the currency was diminishing rapidly. And there was a lot of loss of confidence in the Naira. And that was also not made it wasn't helped by the fact that Nigeria maintained multiple foreign exchange windows. And the gap between the official exchange rate and the other exchange and the multiple exchange rates and the black market rate was just so significant that all you really needed to do was get an allocation of foreign exchange at the official rate, and that was it. So what we did is we carried out a number of certain reforms that helped to deepen the market, close those gaps, and increase liquidity significantly within the foreign exchange market. It was tough because what happened was that there was a massive devaluation, which in itself affected prices. Inflation went up big time. And it was a very, very difficult period, quite frankly. The response to that was that as the market began to understand that we were moving in a free market determined basis, willing buyer, willing seller, and we were going with the market as opposed to a situation where we're trying to fix or hold down the rate, the market responded accordingly. Now, that included some of the more transparent, because this is very important for markets, as you all know. The transparency of the market is very key. We embarked on using certain mechanisms that ensured that those who were trading in the market could see who was buying and who was selling, could come in and go out at ease, and it was not a problem, really. So when that started to happen, transparency started to come into that market, the flows started to come in, and the response was that the gap that I spoke about was closed, and some of that was highlighted by the earlier presentation, was closed. I think at one time the gap was as wide as maybe about 50, 60, 70%, and now it's down to barely 1 or 2%. So no incentive to look for funny ways of buying your foreign exchange. No need to do that. Okay. However, as I said, the rate had to find its own level, so it devalued, and now it's gradually finding a place where it's comfortable, which is fine, because that's really what we want. And with that also, we've been able to grow our reserves. Liquidity is more prevalent in the market. Buyers can come in. They've tested it a number of times. Those who are a bit skeptical, they've come in, they've been able to buy, they've been able to sell. They've seen foreign portfolio investors are a lot more comfortable now. They can see that the market does work, and it responds to willing buyer and willing seller, which is exactly what we want. And that brings about predictability, okay, even with respect to prices and what you ask about with respect to the monetary policy. It helps to anchor expectations, which in turn obviously affects inflation in one form or the other. So that has been relatively positive for us, and I think that has contributed in no small way to the gradual easing of inflation. It has definitely contributed in no small way to that. So we believe those particular reforms have been relatively successful. Now, even down to the retail side of things, because we shouldn't forget that ultimately all these reforms that we do, if it doesn't impact the man on the street, ultimately, then you really have to ask yourself, what are you doing? So I think you find that Nigerians are now a lot more comfortable with the fact that, look, we can get the foreign exchange when we need it. We can actually, like for students who are here, it's easy, much easier now to pay school fees than it was maybe 2 years ago, 18 months ago. Our currency now is more competitive with respect to the trade surplus, which has positively impacted the trade surplus. Okay, more exports, less imports. So we're looking good in that area. And generally, I think people are comfortable with the fact, and this is very important to say, it's very important what I'm about to say, with the fact that irrespective of the fact that the Naira has devalued, it is now stable and there's predictability. Okay, because sometimes there's a concern that when you take on these measures, okay, which appear, quite draconian at the time, prices do go up, exchange rate does go up, but eventually, as I said, it comes down and it stabilizes. And now Nigerians are very comfortable that, look, we can plan, we know what it's likely to be, and we understand how the CBN makes its decisions. So we don't have to front load our demand, which was what was happening before. There was always a rush for people to buy foreign exchange because they didn't know where it was going to continue to go up or where it would end up. So that's all out of the window now. Now, with respect to the financial reforms, the banking sector in particular, which quite frankly, we have a very strong, large banking sector. And for Nigeria, one of the advantages of our banking sector is that they not just serve the Nigerian population, but they literally dominate the African continent. They literally dominate the African continent, with the exception of perhaps South Africa. But they are geographically, they are everywhere. They are everywhere. And some of them are even out here, as you know, in the UK. And basically for us, as we were going through those trying periods of volatility in foreign exchange, devaluation in foreign exchange, we saw it was very necessary. As we were building buffers as a central bank, which is helping to ensure that our naira is stable, we also felt it was important for the banking system also to build those buffers. As a result of which, we made some announcements with respect to ensuring that the banks recapitalized to keep in line with the devaluation of the currency. Okay. And quite frankly, when we did that, there was a lot of cynicism on it. And we did that before the devaluation actually started taking place, because we could see where things were going. And there was a whole lot of pushback against it and disbelief that how could they do this? But I think as the situation began to unfold, it became patently obvious that this was the way to go. And we're very pleased that so far the response has been very positive. And I noticed that the head of the Nigerian Stock Exchange, NGX, is here, and from the reports that I got, even out on that market, the responses have been very positive, and even from the private banks, same. I mean, they see a lot of future in Nigeria, and I can even tell you that even banks and well-known banks, quite frankly, who had been on the sidelines up to this point in time, are looking to properly engage in Nigeria now, because they have more confidence in the regulatory frameworks that have been put in place by the central bank and the predictability with respect to the banking system. And I must admit, we've been, I don't want to say we've been tough, but on the banks, no. But we've tried to change the mindset to ensure that everybody understands the road of travel. And I believe that now that they are coming across with stronger buffers, they too are moving forward with more confidence, and some of the plans that they had on the African continent and other places to be able to properly execute.
Very good, because I was going to say, given my background in international finance and the work I've done on capital flows in the past, so one of the issues when there is more capital flows, portfolio flows coming in, etc., is precisely the danger of increased risk of a financial crisis at some point. So it is good to hear about the accompanying reforms on the financial sector in order to deal with this increased openness to capital, essentially. Yes. That's a very important, I think, element. Now, to push a bit more on that, so to what extent, so we know that right now there is a lot of volatility in international finance, in part because the dollar, yes, the US dollar has been behaving a little bit, unusually, yes. In particular since the April 2nd announcement in the United States, yes. With co-movements between equity prices in the US and dollar and yields, which are very unusual, yes. According to historical data, and a kind of depreciation of the dollar that we have seen, with more people trying to hedge their dollar exposure, etc. So to what extent, given that the dollar is a key price in international finance, especially also when one is exposed to oil prices, yes. So to what extent do you think that these developments in the dollar exchange rate
Yes.
and in the US effectively have an effect on Nigeria and have an impact on monetary policy in Nigeria?
Yes, and that's a very good question. And it's one that anybody managing monetary policy should be concerned about. And to be honest, when you make reference to April, that was a key time. And with what was coming out at the time from the US and the heightened uncertainty, a lot of market actors, market players became a bit nervous, naturally, because markets dislike uncertainty. And let's face it, from that period on, there was a heightened level of uncertainty. Now let me tell you what the story was for Nigeria. Now, we had already gone through much of the fundamental reforms before that time, such that by the time this kicked in April, okay, and subsequently, we were more or less in a good place. Yeah, with the result that when the emerging market currencies all largely depreciated at that time, we were hardly touched. We were hardly touched. And that, to be honest, hasn't changed. Because many investors generally understood the story. They understood that we were less dependent, or we were not as dependent as many thought on oil. We were not. Our reserve situation was gradually being restructured, okay? And that came as a result of the reforms that I spoke about. So, to that extent, frankly, the impact on us and in turn on monetary policy has been relatively mild. Yeah, I think we've been very, very fortunate. And I will admit that if that had happened perhaps a year earlier, the results may have been different. I will admit that.
Mm-hmm.
Yeah.
Very good. So I'm going to push a little bit more on the dollar because there's another very important development, I guess, in international finance, which is that the US administration has been pushing quite a bit for the use of, cryptocurrencies, and in particular, US dollar stablecoins. And this is of particular interest, I think, to many countries because this is a way of potentially increasing the use of the dollar in many countries. So of increasing dollarization, of enabling some transactions which did not take place before that may take place via these new instruments. And so Nigeria has been very advanced in terms of cryptocurrencies, in terms of CBDCs. So do you think that this new wave of US dollar stablecoins, which is, let's say it's growing right now, definitely if you look at the data on US dollar stablecoin flows, it's going up. Do you think this is something that is going to be very important for Nigeria going forward? How do you see this developing, and any fear of dollarization here?
Another very good question. Well, let me just, in answering this, try and give some context. It's important because I know we have, nobody needs to tell me we have a very young audience here. So I know this is something that is dear to the hearts of young people, I know. Look, the history of crypto in Nigeria needs to be understood. You see, in prior years, when foreign exchange became very difficult to get, a lot of people reverted to crypto. This is what happened. A lot of people reverted to crypto. And I think during that period, the authorities didn't pay too much attention to what was going on there. So the crypto market on its own developed a life all of its own. And we suddenly woke up. I mean, we came in with these reforms, and then foreign currency became more available. So the need for many users who went there to externalize, and there are different reasons why people go to crypto or to digital currencies. There are different reasons. Now, those who are going there to externalize and to make payments outside, they suddenly found perhaps they didn't need to do that as much as they thought. And those who have gone in there to trade for whatever reason, well, that's a completely different incentive. But the point is that for us, I don't believe that it is something you can wish away. I think we have to recognize that it has developed in a particular manner, and the Securities and Exchange Commission is beginning to see how to properly engage, with digital currencies, trying to see how to regulate, and we are, of course, working very closely with them. It's early times yet, and having said all that, I want to also emphasize that one recognizes the need for innovation, in aspects of economic activity. We recognize that, the need for innovation. Innovation is a good thing. We also recognize that there are risks. We also recognize there are lots of risks. And we need to take time to understand the risks that we're getting into and to ensure that we can help to regulate those risks and help to protect people who engage in activities outside of the traditional monetary type activities. So that's where we are now. It's still work in progress. It is still work in progress. But as I said, there's the recognition that it is part of innovation, and innovation is good and healthy for the market, and is something that definitely we will come out with a position on that in due course.
Very good. And talking about so big, I see cryptos as a big structural change in the monetary system, but there are also other big trends, other big structural changes. So one, of course, is climate change. Another one could be AI. Yet another one is possibly increasing inequality. How do you think about these big issues that essentially define a little bit the period we live in?
Yes.
And they are not necessarily, linked to the day-to-day central bank job, but they kind of give a sense of trends where we are going. There's also demographics, of course.
Yes.
So I wonder which one of those trends you think are more important for Nigeria, and whether you think about these very deep, long structural changes when you think about the future of a country and about monetary policy.
Yes, I do. Climate change, for example, as you know, we are agrarian, and it's in our interest to continue to develop our agrarian sector and ensure that food security is a priority, and we deliver on food security. So having shocks coming from that area are not good for us. We perfectly understand that. I mean, there's absolutely no doubt in our mind, and there's more and more focus in that area, particularly from the fiscal side, to ensure that at least the dysfunctions can be, more better managed. You see, some of the things that we do in the central bank, quite frankly, is to ensure that we are advisors to government. We can't do everything, But where we see some of these things, we bring them to the attention of the government and try and work with them to overcome some of these challenges. The inequalities you talk about, yes, that in terms of monetary transmission becomes a greater problem too. And that is why some of the actions that the government has taken in terms of building safety nets and ensuring that as many of these safety nets as possible get out, while the growth story begins to properly take root, so that you at least reduce the element of inequalities and get more out to the poor. Then, of course, AI, absolutely right. In fact, for us, I must tell you, as a central bank, we see digitization and AI, quite frankly, as key to the future. Yes, we do. And I tell you that already we have adopted AI in various parts of the bank, including in the monetary policy area. We have, okay, to different degrees.
Forecast or,
yes,
yeah.
or forecast. We have. However, what I want to tell you that is very important is that the board of the central bank a couple of months ago had a retreat, and the theme of the retreat was digitization and AI. Okay, and we brought in resources from all parts of the world. Okay, and why did we do this? Because much as we are adopting AI in certain parts of the bank, we felt that the tone from the top was key. That we at the top had to embrace it and drive the process. Okay, and that's exactly what we're doing. It's at relatively earlier stages now. A lot of work being done. Going into 2026, we're really and truly, going to be blowing the whistle on that. And we couldn't be setting a better signal, okay, than doing it ourselves, rather than just leaving pockets of departments within the central bank to do it on their own.
Absolutely. So I'm going soon to be opening up for questions, so you might want to think a little bit about your best question that you want to ask. But before we do that, I would like to ask you a last question, which is, when you're a central banker, so usually you do sleep at night, but not necessarily well.
Yes.
Because usually you have in the back of your mind some risks.
Yes.
And so I was just wondering whether you would be willing to share with us what are the biggest risks that you see in the back of your mind.
Yes. Well, I think that for Nigeria, we've gone on a relatively difficult path of reform. We had huge subsidies in oil, and those were removed overnight. We had, exchange rates that were all over the place, and the rate was devalued. And these have had, and then subsequent reforms have taken place. In the fiscal side, there have been reforms in tax, and, it's a continuing process. And the worry sometimes is the worry with respect to fatigue of reform. And that is why when you're doing these things, you've got to be able to begin to show progress and give people hope for the future. I think clearly there is hope. In fact, I believe there's plenty of hope. But I think the big challenge for many central banks, quite frankly, is communication. Being able to communicate the effect of some of the things you're doing short, medium, and long term, and carrying people along on that journey and ensuring that they can be hopeful in the future. So I think that is one, obviously. We are also next year going into election mode. Yeah, we're going into election mode. So that's also...
Always a difficult period.
Yeah, so I don't need to say more on that. I think you know that very well. So that's also something. Then coordination coordination between fiscal and monetary, key to success of any effort. The monetary can't do it on its own, and neither can the fiscal. They need to be constantly shaking hands, speaking the same language, and ensuring they're heading in the same direction. When I go to the IMF World Bank meetings, and I'm going there from here, and I exchange views with all other central bank governors and ministers of finance, this particular challenge is one that invariably always comes up. This particular challenge. So while it's keeping me up late at night, I'm at least reassured that I'm not the only one.
You're not the only one. That's all I can testify to that as a whole group. Thank you so much. So I think now I'm going to open up for questions, and oh my goodness. So it's going to be, I'm going to start on this side, and then we will move on. The lady I saw first there. So can you please introduce yourself very briefly? And we are taking questions, so not long comments, and maybe we are going to group, because there's a lot of people, maybe questions by 2 or 3. So please go ahead.
Thank you, and thank you for this initial panel discussion. My name is Tokumbo Ishmael. I'm a private equity fund manager in Lagos, Nigeria, investing in real economy businesses, the small and growing businesses in Nigeria. And I wanted to ask the governor how he's thinking about access to finance for these real economy businesses. Access to finance from the banks is choked, working capital is limited, and even in cases where it is, even in the face of the falling inflation, as you say, interest rates are astronomical. And also the access to finance that is available is primarily being channeled through funds like mine and others in the room at Alethea Capital, where we're bringing in dollars that are then invested in the businesses. And so the sensitivity to the foreign exchange is quite high, but how can we galvanize and convene more local Naira-based capital for these real economy businesses?
Maybe we take a second question. So over there, yes.
My name is Sam Umukoro.
Thank you.
I work for the Africa Interview Sustainability Forum. My question is, as we focus on sustainable growth, how is CBN integrating green finance and ESG principles into its monetary and regulatory frameworks, particularly in enabling the financial sector to align profitability with purpose and drive inclusive low-carbon development across Nigeria?
Thank you. So neighbor, and then this one, and then we will have a first round of answer. Yeah.
All right. My name is Tony Khan. Simple one. 5 months to deadline. 14 banks. 1 merger. What happens if they don't do that by March? Will you extend? And what does that mean for us?
Gentleman here, yeah.
Good evening, everyone. My name is Jay Alawiye. Basically, I'm a businessman, and I wanted to talk about access to credit the lady mentioned. Is it about time we start thinking about a national collateral agency to help the micro and small, medium enterprises access credit? Since the failure, we can safely assume the microfinance banks have failed in their mandate.
Thank you. So I think we're going to let the governor answer this first round of questions with a lot of credit access questions.
Yes. Now, let me say that in terms of access to credit, from the central bank perspective, I would say that what has been important to us is to, firstly, in terms of priority, achieve stability. Because really and truly, without stability, you can't have any meaningful growth. So I just thought it was important to put that on the table first, so that you can understand that it's a sequencing issue, okay? And certain things have to happen first for others to be enabled. So it's not as if one does not recognize that these things are important. We do. But in terms of priority and sequencing, we had to find a situation where there was stability in the market. And then to talk about the issue of interest rates, yes, absolutely. Interest rates are high, no question about it. And I believe that as the situation develops, it will begin to adjust itself. In fact, it has already started to adjust itself. If you look at what is going on in the market today, those who are regular players in that money market, they will see that it has already started. It has already started to respond in its own way to what shows greater market perfection. So, but there's no running away from the fact that we must tame inflation. There's no running, you can't run away from that. Now, I believe that now that the banks are getting better capital, now that the incentives to focus largely on the foreign exchange market and the arbitrage opportunities have literally disappeared, I think more banks will focus on the hardcore business generation efforts, which is really what we want them to do. Okay, so some of these issues and accesses that you talk about, I believe you will begin to find more of them on their own going into that sector. The thing I will also talk about with respect to the banks, because the bank recapitalization, I think, even relates to this. And that is that with the bank recapitalization, we've left the door open in terms of the category of banking license that you decide to adopt. So if you feel that your capital, that you cannot meet your capital requirements, you can downgrade your license and be in another category of bank. You do not have to merge if you don't want to. And if you want to merge, you can go ahead and merge. No problem with that, you know. And I must also emphasize that we have taken our time. We've given all the banks enough time to ensure this was not something that we just got up and said overnight, please, you know, develop your capital by X amount. We didn't. We gave them enough time to ensure that they were able to meet up with the category of license they wanted to be in. So we don't see any undue cause for panic. We don't. We believe option, merge if you want to merge, and we hope and expect that those decisions will be taken by the end of the year. And if you don't want to merge, downgrade your license to another category of license. Remain there. With time, if your situation changes, upgrade again. So we don't see this being an unnecessary disruptive process, because I know that many of these anxieties and questions may come from legacy, things that happened in the past. This is how it was done. Some banks had to, you know, literally what came out of that didn't come out very nicely. But now, frankly, we've given the banks all the options they need, so it really should not be a problem. That also goes back, in my view, to partly answer the question again with respect to access. Because as these different categories of banks begin to emerge, then you need to take a decision as to where your strengths really lie and focus on that. You can't be all things to all people. And that is the direction of play and direction of travel.
Very good. Thank you very much. So now we are jealous on this side. So I think I think we're going to Oh my goodness. Okay, so we start by aggregating. And there's also some online question I can see.
Oh, wow.
Oh, wow. So let's start by a non-online, and then we move to the online. So please, yeah, right there. Not online, not online.
Good evening. Thank you very much, Governor and Helene. My name is Ibukun Adebayo. I'm a representative of a company called Restitution Capital. We work on asset recovery for sovereign governments. My question, however, is primarily to congratulate the Governor and the team, in particular, in some of the achievements based on your monetary policy. Number one, helping to bring down debt to GDP ratio, and I think to your point also bringing down debt to revenue ratios as well, which is a result of the growth that's happened in the economy. There was an announcement earlier this month which stated that the central bank will be taking over the essentially the FGN bond market, and then in that respect looking at settlement and trading of Nigerian government bonds on the central bank. So my question really was if you could just elucidate a little bit as to the rationale for taking that function in-house to the CBN, and does that mean that we'll see an electronification of the Nigerian bond markets as a result? Thank you.
Thank you. Maybe now we move to the online, just there, yeah.
Sure. We've had lots of questions online, but we've had one from Tulu asking, how is the central bank thinking about microfinance banking now that digitisation has accelerated financial inclusion? The current licensing regime is location-based. Are there plans to alter that, seeing that microfinance banks can today serve the entire country via mobile apps?
And then we go a little bit further along and we take one more and then we start answering, I think. And then we go around.
Hello, sir. My name is Umar. I'm a student at the University of Derby studying business management. You mentioned inequality and certain measures you are taking to reduce in the economy. Recently, the World Bank produced a report stating that about 130 million Nigerians are living in abject poverty. I would like to know what you think about this and what specific policies the bank is taking to address this. Thank you.
Thank you very much. Yeah. Answer to your question, FBN bond market, you have the right person to talk to. Let me hand over to him too.
Yeah, okay, I got it. Look, so I think the bond market question is quite apt, and I think the way you need to situate that is there's no takeover. I think that's just been misinterpreted. What we're doing is basically akin to what you've seen in the foreign exchange market, okay? How do you get the market to function better, get more transparency, price discovery, set a proper yield curve, benchmark that can then lead on to the broader market just evolving, right? As you have in most markets. The piece of work that is going on as the first phase of that is around the market infrastructure and just optimizing that to just work better. So there's the fears of, taking over all of that don't exist. There's absolutely no plan of that. It's about just getting the market participant to operate in a transparent manner. The banks, the pension funds are involved in this journey, the brokers, everybody that is a market participant is enabled to participate according to their license category. So you just avoid all these issues where you've had in the past where different folks do different things in a very opaque manner. So it's all about how do you get the markets to just function better. That's the message we want you to take away. There's no takeover or anything, just transparency, market efficiency, proper price discovery, yield curve that extends beyond the just government securities and the stuff you'll expect in a functional market. Yeah. Electronic already works, so the market is already working electronic. The bonds are traded on Bloomberg. That we're not planning on changing. So, yeah.
Thank you. Microfinance and technology. Yeah. Now, it's a good question, and what I will say to you is that it is work in progress. And when I say it's work in progress, we're relooking the whole framework of how we're going to approach the microfinance banks and that sector, other bank, non-bank institutions. We're looking at that. And of course, it's clear that there's a need for a technology-based approach. It's clear that has to be the case. Up to this point in time, it hasn't. But going forward, we're putting in place a framework that will, quite frankly, change the way business in that sector is conducted and supervised. We're going to do that. Then the issue of inequality and abject poverty and the report from the World Bank. Now, frankly, I think that is more a conversation that would be properly addressed by the fiscal side. But I would just make a couple of comments that I think are very critical for people to understand. Now, you see, I had mentioned that you're not likely to have sustainable growth where there's inequality. I beg your pardon, where there's volatility, okay? And it was important that stability be accomplished. Now we have stability. We haven't had stability for many, many years. For those of you who've dealt in the Nigerian market, you will find that it has just been boom and bust, okay? Certain things happen, everything seems okay, there's suddenly huge devaluation, and then another 5-6 years, everything's okay, another huge devaluation. And people were very reluctant, although they did, to take foreign exchange positions. Many dealt with foreign exchange transactions and ended up, in fact, I could predict that in a certain number of years, there'll be a devaluation and you'll lose money. Predicted. Now that has gone. That has gone. Because now all the, the wrinkles in a system, the opacity in the system that resulted in dysfunctional markets, and ended up in us optimizing are out of the window. And as long as that is there, you now have the basis to go to sleep and be rest assured that in 8-10 years' time, yes, you will have devaluation like everybody else does. But these huge shocks that take place and send everybody running helter-skelter, you're not likely to have that. Okay? So that is a fundamental difference from what Nigerians have experienced up to date. It hasn't happened before. It hasn't happened. So going forward, we can now see the basis on which there's grounds for the economy to grow, and there's grounds to begin to see the level of poverty reduce. Without that fundamental, stability there, all the other things we talk about will just be, frankly, mere illusions. Mere illusions, because nobody wants to lose money. And nobody will stay there, make so much money, and in X number of years' time, you're dead certain you lose it. So the market is more efficient now, okay, that serves as the anchor for other things to happen that will bring down these inequalities that we spoke about.
Do we have time for a couple more questions? Because there was...
Sure.
I'm going to have to make some difficult choices here.
Better you than me.
Let's do a lady, no? I mean, a lady up there, and then the gentleman here in blue. And please keep them short.
Okay. Hi, my name is Sephora Akako, Sloan Masters in Leadership and Strategy, London Business School. You did mention the issues around fuel subsidy removal, and there's also been the power rates reforms, which affects a lot of average Nigerians, as well as the CBN monetary policies and fiscal policy that was also released sometime this year. What does that mean? What do you think it means for the average Nigerian? This is related to the poverty question, or the question around poverty. But what does it mean for the average Nigerian who has to also plan for eventualities, for uncertainties over 70% of Nigerians pay for their medical bills out of pocket. So how do you want to communicate this stability? You did mention that stability is key, and we are also expecting some elections coming up next year. What's the promise for keeping this stability with the change in government or potential change in government?
And yes, you in blue, yeah. Could we give a mic? Because people who are in the middle are a bit disadvantaged here with the mic situation.
Good evening, Governor. My name is Pascal Mensah, and I work for the Center for the Study of African Economies at the University of Oxford. I just had a quick question on what do you see as the role of the central bank in unlocking growth in Nigeria? I think you've mentioned that priorities and sequencing is important, and I would agree that macro stabilization obviously is foundational. You know, without that, I think structural transformation, growth, public investment, you don't get the necessary resources to do that. But you've also, you know, we had a nice little chuckle when you talked about the election coming along and the role that fiscal plays and how you manage monetary policy. And so I'm just curious, now that you feel confident about the foundational stability on the macro side that you've gotten, how do you see your role in trying to get sort of the next sequence, which, you know, growth, structural transformation, to get the necessary, I think, resources to make the necessary public investments that some of these other questions have been alluding to?
Yeah, thank you very much. What does this mean for, these are two good questions. What does this mean for the average Nigerian? Again, what I would say by way of context is reforms, unfortunately, had not happened, should have been done decades ago, were never done. And now that they are being done, there's hope as a result of this stability that there's the foundation for growth. And honestly, that is what it is. If these had been done earlier, it wouldn't be this painful. All that has happened is that over the years, we've kicked down the problem, kept kicking it down the line, and you got to a point where you couldn't kick it down any further. That's what has happened. And as a result of that, you had to fix the problem once and for all. Because you just did not have an option. You didn't have an option. The fuel subsidy, certainly not sustainable. The foreign exchange market, we were at a crisis, complete and utter crisis, that would have left the economy much worse off if we had allowed it to continue. Much worse off. There'd be nothing to discuss. We're here discussing today of the fact that over the past 2 years, we've been able to move things to a better place. I would put it to you that if we didn't do what we did, we wouldn't be here to discuss, because you wouldn't find anybody discussing anything. So I think that is the answer to that one. Stability with respect to change in government. Now, very good point, and I brought it up in being very open and transparent about it, and I'm glad, Prof, that you mentioned that this is an issue that you see in other parts of the world. Yes, we see it everywhere. I am hopeful, because I must tell you that even the politicians have seen how bad things can get and how the road of travel have taken us outside of a crisis situation. And I say this from experience. You know, when I became central bank governor, I have to go to the National Assembly every 6 months to give a record of the things I've done, which happens everywhere, I think. And these were always very difficult conversations to have in the beginning, because here was a central bank governor who was doing very difficult things and very painful things. And politicians in the legislature have to go back to their constituents, and they always had problems dealing at that level too. So these were very difficult, very, very difficult, and it was never something I ever looked forward to, but you had to do it. But happily, the last one that I went to was extremely cordial. Extremely cordial. In fact, way beyond my expectation. It's never happened. And that was a reaction to the fact that their constituents were pleased with the reforms and what was coming out of it. They were pleased. So why am I saying this? Because I believe that now that we've gone from the worst to progress and everybody is feeling the impact of it, I have a feeling that, there'll be less of a tendency to want to rock that boat too much. So that's the way I look at that. That, it can't be perfect, but my sense is that they will be more inclined to want to listen to the central bank governor to say, look, this is not a good idea. So let's just think that, that is likely to play itself out in a positive way. CBN's role in unlocking growth. Honestly, I really do hate to sound like a broken or a scratched record. But frankly, for me, the main thing here is achieving stability. That's it. Mine is to help the government to achieve their objective of growth, and I do accept the fact that that must happen. But my job is to ensure that there's stability in prices, there's stability in the foreign exchange market, and there's predictability, and that really is the fundamental in which everybody else determines what happens and where the growth comes from.
Fantastic. Well, I think on these positive notes, I apologize for everyone, but we are out of time already. I know there are many questions, but thank you so much.
I think another round of applause wouldn't be too much. Thank you. Distinguished faculty members, investors, students, ladies and gentlemen, good evening. My job is very simple, just to provide some closing remarks in a minute or two. I'm sure we were all listening to a thought-provoking and inspiring conversation with Governor Olayemi Cardoso. He has narrated a story of bold and courageous reforms in the Central Bank of Nigeria in the last 24 months. We are all convinced that the macroeconomic indicators in Nigeria are turning green, from inflation to exchange rate to our reserves, balance of payment, and banking system. A lot of remarkable achievements have been made. He has also outlined the policy direction of his administration and demonstrated unwavering commitment to sustain these reforms. Therefore, to our esteemed investors, we cherish your vital engagement today and partnership in this meeting. And this is very key to unlocking the future potentials of the Nigerian economy. Therefore, on behalf of everyone, I would like to express our sincere appreciation to Governor Olayemi Cardoso for his inspiring leadership, to our esteemed investors for your sustained confidence and trust in the Nigerian economy, and to every participant here, we say thank you for making it a huge success. We cannot forget to acknowledge the contribution of the organizers, our friend Tiago, Professor Helen Ray, JP Morgan and Goldman Sachs, our big sister, Dr. Nkiru, and all others that have contributed overwhelmingly to the success of today. Together, we can build a future of shared dreams and prosperity, where everyone is a winner. Thank you.